If you are trading this week without this forecast, you are trading blindly. Gold and GPBJPY are approaching major liquidity zones. So this very week, I will be analyzing gold and maybe probably one or two pairs, and I will be showing you the direction of the price for this week. And I want you to pay attention. Let's go into it. So about 2 weeks ago, gold actually came down on a weekly time frame. Can you see this is gold? It came down on a weekly time frame, tapped into a weekly fair value gap, and after tapping into a weekly fair value gap, it gave a rejection candle. And I posted this analysis, this forecast. I posted a forecast on the mentorship group. You understand? I analyzed gold and I posted the video on the mentorship group. So, and I also explained to them the direction where this particular instrument is heading. So now, what actually happened was that after gold came down to this weekly fair value gap, it gave a rejection, and this is a rejection candle. Now, gold is expected to what? To expand further to take out this high, right? And after taking out this high, and it is also expected to what? To go up to form a new high. So, and once you know how to trade with two candle rejection, because I've actually explained this on this channel, okay? And if you have not watched it, you can kindly go and watch it. You understand? I say that after a rejection, immediately this rejection candle closes, you entered what? The trade, especially for what? For swing traders. This particular pair, I mean, this particular trade is going to be what? Is going to be favorable to you. So then, now just look at it. This is a rejection candle. Once this rejection candle closed, you enter immediately. Can you see? So this is where you should have entered. Then you place your stop loss at the low of the what? Of the rejection candle. Then you set your what? 1:2. Like I always say, 1:2 is more than enough to make you what? Super wealthy. Now you might be wondering that how come I place my TP somewhere around there, because this is the high of the what? Of this fair value gap, this weekly fair value gap. So is it not that price will get here and turn back or reverse? Now one thing about this gold is that it is expected that after taking out this high, it will continue to create a new high. Okay, you get it right. So I gave this analysis and last about last week, and gold did not actually expand, and I still came down to the group, to the mentorship group, and this is it. I actually assured them that, look at it, I actually assured them that we predicted last week that gold will be bullish, and also stated that if it starts into the 4 hour fair value gap, price will push up. Gold remains bullish. I told them that gold actually what? Remain what? Bullish. So then what eventually happened? Then subsequent week, gold eventually expanded. Can you see? After rejection is what? Expansion. Can you see? Price even gave another rejection candle here. So can you see this past Friday? This is what happened to what? To gold, and gold is still what? Moving up to what? To take out this high. So definitely this week, gold is expected to what? To expand to what? To take out this high. You understand? So now that is the forecast. Gold is expected to what? To take out this high. How do you get involved? So when you go to the lower time frames, when you find fair value gaps on the lower time frame, then you can get involved. Maybe probably on daily, or probably what? On 4 hour time frame. But if you are a swing trader, you are still fine. You are good to go. So you just continue to ride it, take out this high, then you wait for price for gold to what? To form a new high. So after forming a new high, then it would have what? Hit your what? Your TP. You understand? So now let's continue. Now, as gold is approaching this high, so what is expected? So some of you will be like, okay, when gold gets here, gold is going to reverse. Gold is going to what? Retrace back, or probably it will change direction. You understand? Yes, it might. Gold can just get to this high and take out this high and continue to run, right, to your TP. or probably it will get here, sweep the high and what and retrace. Okay, when it retrace, one thing about it is that as gold is going or approaching this liquidity, it's actually forming what bullish fair value gaps along the way. So when it gets to this liquidity, it will now what sweep this liquidity, or probably after sweeping this liquidity, it will retrace back into a fair value gap that it created while it was approaching this liquidity. It could be that the fair value gap created could be weekly fair value gap, or probably a fair value gap on the lower time frame, such as daily or what 4 hour what time frame. Now let's take a look at what is expected to happen if after sweeping this liquidity, if there is going to be what retracement, it's going to retrace back into the fair value gap that it created while it was going. You understand? So when it comes back to this fair value gap, then it will now push. It is this fair value gap that will push price upward, because like I've always said, fair value gap is a magnet. After it has magnetized price towards itself, it pushes price away because it's a rocket. So it pushes price away towards your what? Your TP. Okay. So this is what will likely happen, or probably after gold takes out this side, it will continue to run without or retracing back into a what a fair value gap. So I believe you understand that. Okay, so now let me break down how myself and my students in the mentorship, how we took this particular trades over this past week. So don't forget that I told them that um, gold has created a rejection, two candle rejection. It has created a rejection within this weekly fair value gap zone, right? So now I told them that if you are a swing trader, you can just hop in, and then ride it. If you are not a swing trader, when gold came down into this fair value gap, you understand, they will now have to go to the lower time frame for a perfect entry. They know how to do all of this, and I've also taught that on this channel too. Okay, so now then I now switch back during one of my forecasts, which I posted to the mentorship group. I told them that where I now switch down to what daily time frame. You understand? So and I explained to them that okay, can you see? Can you look at this weekly fair value gap? Can you see? Look at this rejection candle, the rejection candle that we saw on that what on that weekly time frame, right? Now, on daily, price was actually going up. This weekly fair value gap was pushing price up, but it now encountered a bearish or opposing fair value gap on a daily time frame. And this fair value gap has its own function. Its function is to what push price down. That was why we have what after price has entered into this bearish fair value gap, this daily fair value gap push price away. You understand? If you don't understand how price moves, you would have thought that okay, price has changed direction and price is going is what is going bearish. No, no, price is not going bearish because weekly fair value gap is stronger than daily fair value gap. So I've actually explained that concept to you on this channel, Seek and Destroy, part one, part two. Go and watch it. You understand? This weekly fair value gap is stronger than daily fair value gap. Now, why this weekly fair value gap was pushing price up and it can encounter this daily fair value gap, this daily fair value gap has its own strength, it has its own energy to push what price lower, but it is not sufficient enough to surmount this what weekly fair value gap. Okay, so because this weekly fair value gap, it took like a whole 5 or 6 days for it to be formed. 5 days to what to gather momentum, to gather energy. You understand? So can you imagine? So it's not possible that just a fair value gap that is formed within one day to now push price down against the what this weekly fair value gap. Okay, because the energy, the force that this weekly fair value gap has is stronger than what than the daily fair value gap. So the daily fair value gap will only push price lower a bit, then to then continue what higher after it has exhausted its what energy, then the weekly fair value gap took over. So and this daily bullish candle, I told the people, the students in the mentorship that they could still enter. Okay, after they've seen this daily daily candle, they could still enter. That was why what That was why we placed another trade here. Immediately the close of this daily fair value gap, we took advantage of it. We entered the trade. We target one ratio what? 1:2, which is still the what? The high of that weekly fair value gap. And eventually, price actually what? Was actually ranging. Price came down, and price is not expected to come down to this zone because price has been rejected within this zone. When price has been rejected from a particular zone, what is expected of price to do is to continue to what? To move upward. When you are rejected from coming into your friend's house, what will you do? You go away. I've explained that concept. Okay, so you don't need to be scared that okay, price is coming down to what? To take out my stop loss. No, it's not coming down to take out your stop loss because this zone has been rejected. Okay, price is expected to what? To expand forward. And funny enough, on this daily time frame, price eventually moved and created a new daily fair value gap. Okay, so which is actually very good for us. So on this um, new fair value gap, you could have still taken advantage. We took advantage of it. Now let us map it out. So when you map it out, you see it. Can you see? Price came down into the what? Daily fair value gap. It's an opportunity for you to what? To take a trade. So can you see? So after it entered into this daily fair value gap, it pushed what? Price away. You might be wondering that okay, is this this candle that came into this fair value gap is not a rejection candle. But if you go to the lower time frame, which is what? 4 hour. Let's switch to the lower time frame. Can you see? This is now what? 4 hour. Can you see? Don't forget that this is our daily fair value gap. Okay, on a 4 hour time frame, right? We are looking at it from the 4 hour time frame view. Now on the 4 hour time frame, can you see? Look at it. We have a rejection candle in this daily fair value gap. So this is a signal that what? That we can what? Take advantage of this because we have a weekly rejection. A weekly rejection created a new what? 4 hour rejection, which is very good for us. So we take advantage of this. We enter this trade. So look at it. That is how we were able to take advantage of this trade again, and eventually look at what happened. We took advantage of this trade and we targeted 1:2. 1:2 is more than what? Enough to make you super rich. So now eventually what happened during that week, this last week, price was ranging seriously. So price was ranging. As price was pulling down, it was going up. Okay, and eventually what happened? And there was actually a news release on this part. I think Donald Trump spoke, so and there was a high effect. So price was actually pushing down. Okay, some traders who are not experienced would have thought that okay, price is coming down to take out their what? Their stop loss. No, price is not coming down to take out your stop loss because there is this zone has rejected price, and this is 4 hour what time frame. Your analysis time frame, so you don't need to be scared of the news when you know your what, when you understand your strategy so well. And beside, we are in analysis time frame. Maybe that is on 1 minute time frame, no, probably 5 minute time frame. Okay, price could have the news could have swept you out and continue, but this is analysis time frame, and there is a rejection. Price has been rejected from this zone. So when price was ranging, I knew that what price is eventually going to what break up because I know where price is what heading. You understand? Because our weekly fair value gap is still pushing price upward. Okay, now for some trader who are just chart pattern trader, they will be wondering where is it going to break out, or is it going to break down or probably break up. You understand? But as an experienced ICT trader, you should know that okay, you have a weekly time frame that is pushing price up. Even though now that price is still ranging, you know the direction where price will break out to. Okay, so now eventually what happened? Price broke out this Friday, and when price broke out this Friday, it hit our what? Our TP, and we made a lot of money from this. And don't forget, we still have a bigger what picture. We still have a bigger trade that is running towards this high of this what weekly fair value gap. I believe you understand that. So this is not just a forecast; it's also a way of what teaching you and explaining to you how to properly read the market sentiment, how to properly understand the language of price. Okay, most of these traders in the mentorship community, they are really doing well. They are making a lot of money because they understand all of these things. So these things are not just new to them because they've gotten themselves acquainted with the world, with price action, with market structure. Now, if you have not subscribed to this YouTube channel, I want you to what? Hit the subscription button right now. Just go and do it. Hit the subscription button. And not just only that, I also, after hitting the subscription button, I want you to share it. Share it to as many people as possible. Let them watch this video so that what? They can gain what? Clarity in their trading journey. All right. Thank you.